All right, everybody. Welcome everyone to today's webinar, Introduction to Bookkeeping and Accounting. This webinar is the next installment in the Climb Fund Entrepreneurial Elevation Series. We're delighted to have everyone here with us today. Now, before we get started, let's begin with some introductions. I'm your host, Thomas Gorman, and I'm the Client Success Coordinator here at the Climb Fund. And joining me today to lead the discussion, we have three very talented and insightful professionals. First, from EH Services, we have Caitlin Rummel, who's the operations manager, and Anna Holt, who is bookkeeping manager. Also joining us today, we have senior district manager at ADP, Jack Nicoli. So welcome to you all, and thank you for being here to share your thoughts and insights. In our session today, we'll begin by covering the basics of bookkeeping. This practice is more than just keeping track of numbers. It's about creating a comprehensive picture of your financial landscape. We'll discuss effective techniques for organizing your records, tracking income and expenses, and basic terminology needed to understand the basics of bookkeeping. Mastering these elements can save you time, reduce stress, and empower you to make informed decisions about your business. Next, we'll shift our focus over to payroll, an essential function that goes beyond merely paying your employees. Accurate payroll management affects employee morale, compliance with regulations, and your overall cash flow. We'll delve into the best practices for managing payroll efficiently, ensuring you meet legal requirements while fostering a positive workplace culture. We have a great lineup of speakers today who will share their insights and answer any questions. I encourage you all to engage with us throughout the session, and let's take this opportunity to elevate our knowledge and skills, paving the way for stronger, successful book business. And thank you for all for joining us, and let's get started. So Caitlin, I'm going to kick it over to you.
It's good. Wait, bear with me here while I share my screen. All right, can everyone see that okay?
Yes.
Yes, I can see it.
Perfect. Right, so thank you guys for having us here. Me and Anna are very excited to be here and share a little bit about bookkeeping and what we do. We're with EH Business Services. Elizabeth Holt founded EH Business Services in 2004. She is the EH in EH Business Services, and she brings a lot of knowledge to the company. We do monthly bookkeeping. We will keep up on your bookkeeping, do your transactions, help you with reconciliations, sales tax, and payroll. We also do training. We'll teach you how to use QuickBooks. We do QuickBooks setup. We'll help you get QuickBooks up and running. And we also do as needed consulting. So after your QuickBooks is up and running, we have clients reach out to us just with questions and troubleshooting with QuickBooks. Climb Fund does pay for 8 hours of paid training with us. So definitely a good opportunity, and you want to make sure that you take advantage of that and reach out to us because we can help you there. All right, so first, what is bookkeeping? Bookkeeping is recording all of your financial transactions that are occurring on a daily basis when you guys are making expenses, bringing money into your business. Those are all, well, they all should be recorded. And the process of recording those is bookkeeping. It's to keep everything organized and so that you can make up your financial reports and use those to make educated business decisions. Bookkeeping is important. It helps track your income and your expenses. It gives an insight of how your business is doing. It will also help with looking at areas that you can save money. looking at your expenses to see if there are any that you can kind of cut out. It helps in decision making, looking towards the future, and how to get to where you want to be, creating a budget based off of your past expenses. It also helps with compliance, depending on what kind of business you are. There are different reporting requirements, and having clean books is always helpful in those situations. Also helpful with your payroll tax and your sales tax, knowing how much that needs to be paid out. And then finally, it's essential in preparing your reports. Client Fund does require that you guys send them a profit and loss and a balance sheet. So making sure that you have a good system in place will help with that. We use QuickBooks Online, so that's where I'm going to be kind of basing everything off of in this webinar, but there are many other softwares that you can use as well. Some key principles, double entry system, and accrual versus cash basis. So a double entry system, we're just going to briefly touch on this because there's enough information here that we could get into a whole webinar by itself on this, but it's not really necessary to know. So we're just going to go over what is important for you to know whenever you're using QuickBooks. QuickBooks will do this on the back end, so we don't really know that it's happening, but double entry system is that there's always going to be one debit and one credit, and they have to equal each other. So no matter what you're recording into QuickBooks, you're going to have one on each, one debit and one credit. For example, if a business is purchasing a computer for $3,000 in cash, your equipment asset account is being affected, and also your cash account, which is another asset account, is being affected. So why this is important is when you're categorizing and recording your transactions, you want to be aware that it is affecting two parts. It's not just affecting those expense accounts. There's somewhere else that it has to be tied back to as well. The next is accrual versus cash basis. So you're going to want to keep in mind of what basis your business is running on, whether it's cash or accrual, and then sticking with that. Cash basis is you're recording the expenses and the revenue when you're being paid, such as a coffee shop. If I had a coffee shop and I was selling coffee and being paid at the same time that I'm giving my client a cup of coffee, that would be a cash basis. I would record those on sales receipts because I'm getting paid at the time that the product is being sold. Accrual basis is recording the transaction and then not necessarily getting paid for it until later on. An example of this would be a landscaping company. If I do landscaping services for my client and then I send them an invoice, I might not get paid for 5 to 30 days after that invoice goes out. So I'm recording the invoice, but not getting paid until later. What's important here is that most of the reports within QuickBooks, there's an option to do accrual or cash basis. So you want to make sure that you're paying attention to that and always running your reports the same way so that your data is consistent. So the next thing is your chart of accounts. So as you are categorizing your transactions, you are going to be putting them into different buckets. These different buckets are your chart of accounts. And depending on what the transaction is, you're going to want to make sure that it's tied back to a different kind of chart of accounts. Your assets, liability, and equity are all going to be on your balance sheet, and your revenue and expenses are going to be on your profit and loss. Your assets are things that you own. This can be your bank account. This would be if you own your office building or any business vehicles. Your liabilities are money that you owe other people. So this could be the mortgage on your office building, any credit cards or business loans. Your equity is your assets minus your liabilities. It's what your business owns after they pay off everything. This could also be money that the owner is taking in or putting into the business or taking out of the business. Revenue is money that you're bringing in, and expenses is money that is going out to day-to-day expenses. It's important that whenever you guys are categorizing your transactions, that you guys are aware of the different chart of accounts. When you start QuickBooks, they will give you a template of different chart of accounts, but there are going to be times that what you have isn't going to fit in, and you'll have to make a new one. This most of the time happens with expenses. So whenever you're making a new expense category, you want to make sure that it's tied back to expenses instead of revenue or asset, so that it appears in the right place. Okay, so the bookkeeping process. So once your bank account is connected to QuickBooks, transactions are going to feed into QuickBooks. So whenever you use your debit card to buy things, or when somebody pays you, these transactions are going to come into QuickBooks. You're going to categorize them and put them into your different chart of accounts or your different buckets. And those are going to make up your reports. At the end of the month, whenever you get your statements, you're going to want to reconcile all your accounts and make sure that they match what QuickBooks has in there. There may be times that things get miscategorized or they get put with the wrong bank account. So those things will come up whenever you're reconciling. And after everything matches and you don't have anything that wasn't checked off, then you can finish out your reconciliation for the month and you're able to prepare your reports. You want to make sure that you are reconciling everything so that you know everything is accurate when you're pulling your reports to make your business decisions. The two most common reports are your balance sheet and your income statement. Climb Fund does require that you guys send these reports to them. So it's important to know how to get them and to know that they are accurate. Your balance sheet is a snapshot of your assets, liabilities, and equity at a specific time. So your balance sheet is always going to carry over to the next year. If you own your office building, most of the time you're going to own it next year as well, unless you sell it, and then it needs to be reported on your balance sheet. Your income statement is a summary of revenue versus expenses over a period. So you can make this whatever period you would like, but year to year, your income statement will start over. So best practices are regular updates, making sure that you're staying in your QuickBooks at least once a week to categorize those transactions and staying on top of those reconciliations. Making sure that you have separate finances. You should always keep your personal finances separate from your business finances. You should have a separate bank account, separate credit cards that are just for business. If there are sometimes that you will make a business transaction on a personal card, those can be recorded in, but you don't want to connect your personal accounts to QuickBooks. And then periodic review, looking over those reports and just making sure that everything is in line. So in conclusion, bookkeeping is essential for making good business decisions, seeing where you're at, making sure that you have a good tool to help you with your bookkeeping is important. It's going to save you time and be a lot less stressful. And you want to also stay on top of any advancements or any changes that would occur. Do we want to do questions now, or do you want to save those for the end?
We can save those for the end.
Okay. So I just want to say thank you for having us here. This is me and Anna's contact information, and then our website. If anyone wants to reach out to us, we'll be more than happy to help you guys. That's all I got.
Thank you so much for that, Caitlin. We really appreciate all the great information. And now let's kick it over to Jack for a little bit of conversation on payroll. Jack, what you got for us?
Yeah, absolutely. Can you hear me all right, Thomas?
Absolutely.
Wonderful. Well, thank you. And thanks, Caitlin, as well for sharing all of that. Let me go ahead and get my screen shared here. Easier said than done, I guess. Here.
Apparently that's the challenge today.
Yeah, everybody's got a different, can you see this all right? All right, wonderful. And it's sharing full screen, correct, Thomas?
Yes.
Perfect. All right. Well, first off, thanks everybody for joining. We'll get into a little bit of an introduction here, but just wanted to walk through some mostly educational stuff in regards to payroll. I know a lot of people are getting into small business here, and one of the big questions is, how do I actually go ahead and effectively pay myself, right? We're not, everybody at the end of the day eventually is obviously trying to earn an income through their business, and just wanted to talk through everything here for you. Like Thomas mentioned earlier, my name is Jack Nickley. I work here directly in Charleston, South Carolina, and the surrounding areas or whatnot here with ADP for about the last 4.5 years or so. A little bit on the payroll side, as well as on a little bit of the retirement side, but today we're going to focus mostly on some of the payroll compliance, things that you should know, obviously, within your business, and just be very informative today. First off, I always got to share a little disclaimer, not a CPA. So obviously the ladies over at Business would be able to go ahead and be able to get you a little bit more on the advice as far as tax side of things goes. So obviously trust them with all your needs there as well. Wanted to walk through a little bit of agenda. We're going to basically break down who's a good fit for payroll, right? How do you know if you should be paying somebody a W-2 or giving them a 1099 at year end? A little bit of the breakdown between payroll. And then some different advantages you obviously have for using different service providers, whoever you decide to go with, and then gonna open up the floor to any questions that you may have, and we'll get started. So first off, I always like to start with some of the main misconceptions that people have when they're thinking of payroll, right? A lot of times it comes to be when you hire your first employee, you decide, hey, I need a little bit more support within my organization and would like to go ahead and bring somebody on who can go ahead and help me drive revenue for my group. A lot of different misconceptions are, hey, I'm too new for payroll service. Maybe let's see once I get down the road a little bit if I fit into that a little bit more. I can't afford to pay myself or anyone else right now, which is something we see a lot. Maybe I don't have enough employees to use a payroll service. I'll just try to do it all in-house myself. Or, hey, all my employees are actually contractors or that 1099 designation. We don't need a payroll service. And so let's go ahead and talk through some of those common thoughts and answer some of those questions for you. So first off, what type of businesses need payroll service or some sort of payroll processing organization for them? So we're going to break down a couple different things that's going to relate to everybody as far as their business formation, right? So you may know yourself as a sole proprietor, an LLC with an S corporation, a C corporation. There's a ton of different designations, which obviously your tax professional will help kind of guide you and designate which one is going to be the most advantageous for your group. So if you're a sole prop, right, is payroll really necessary for you? If it's just yourself and you're a sole proprietor, no, honestly, you can go ahead and payroll might not be a good fit for you. However, if you're going to be operating as a sole proprietor and you bring on a W-2 employee, you're going to start running into questions like, hey, I'm supposed to be withholding taxes on the state level, on the federal level, unemployment for the state, unemployment federally. How do I go ahead and navigate this? And something along the lines of some sort of payroll service to be able to go ahead and help guide that, as well as the tax forms that then become applicable for you. The next business entity we're going to jump into is an S corporation. Normally, we see S corporations with a business who's been in or a group that's been in business for maybe a couple of years. They find the revenues growing a little bit higher, and like I mentioned before, obviously your tax professional will help guide you to when that might be the best designation for yourself. But a lot of people who do want to become S corporations, they finally need to be on payroll themselves. It's one of the only requirements actually with being an S corporation is to pay yourself what we call a fair and reasonable salary, which is about as vague as it gets. It's of course how most of the tax law is. But once you do become an S corporation or a C corporation with an employee, right, we're going to need to go ahead and be able to withhold from people's paychecks. What are we withholding exactly? Several different taxes, right? So with that being said, federal income tax, state income tax, Social Security, Medicare, as many are familiar with, state unemployment, and federal unemployment. So that's once you become an S corporation. Obviously, we need to go ahead and we're going to help alleviate some of the self-employment tax by taking that S corporation designation that obviously your tax professional will help you for. Jumping into the next entity formation is the LLC, right? Most people, once you hit the LLC designation, you're probably going in and opening up a bank account, right, for your business, trying to separate a little bit of the liability between yourself as well as your organization, right? So when for an LLC, is it necessary for you to be on payroll for your group, right? So the next question you'd want to ask yourself is, hey, do I have any W-2 employees? Is there anybody I'm currently paying right now under my organization that would require me to be withholding taxes? If you answer yes to that, you're definitely going to want to go ahead and get working towards a solution to help you with your payroll. What does that mean exactly? Like we've talked about, it's going to be where you're withholding taxes, you're filing those taxes upon their respective due dates, you're paying the taxes as well, and a lot more liability comes into it. If you don't have any W-2 employees as an LLC, are you still required to go ahead and withhold taxes? It really depends if you want to pay yourself as the owner under an LLC. If you're finding yourself as an LLC, usually with a subchapter S or an S election, then yes, the owner. But if you're not going to go ahead and you want to pay self-employment tax at year end, you would not necessarily need to be on payroll if you're not taking that S corporation election. Long story short, and nobody's here obviously with a ton of tax knowledge, or most people probably would not be. So quick summary, a couple things to jot down. If you're an S corporation, you decide with your tax professional to become an S corporation, you would definitely need to go ahead and utilize the withholding taxes, things along those lines. As far as let's jump into the sole proprietor then, like we talked about, no employees or single member LLCs. you do not necessarily need payroll, right? So we don't want you to be obviously doing things that are going to get you in trouble. So we would definitely go ahead and recommend that you don't do payroll if you're just a sole proprietor with no employees. And if you have any W-2 employees paid through the organization, no matter what your entity is, you're going to want to go ahead and start withholding taxes, doing the company match on taxes, which will kind of break down a little bit of what all of that will look like for you. So a lot of the question now goes into, and with the changing market, everything like that, what is a W-2 employee versus a 1099 employee? How do I know what that proper designation is to make sure you as a small business owner are staying in compliance? So we're going to walk through a couple different designations, common misconceptions as far as maybe they should be a 1099, maybe they should be a W-2, and go ahead and answer a lot of those questions for you. So first off, what is a 1099? A 1099, or sometimes people call them their contractors, right? So it's a little bit separate than within your organization. They're going to be an outside party. But what they're doing is they're providing a service in an independent trade, business, or profession. Right? They're going to offer services to the general public under a contract agreement. So, hey, they're doing stuff themselves. However, we kind of have an agreement together that it's going to be facilitated through that, as well as they're going to have more control and be able to prove that they have more control over things such as how and when they go to work, right? So a little bit separate of an entity for you than your business. All right, so what are some of the advantages of having an independent contractor, or even some of just the differences? So it's going to be a little bit fewer on the obligation side for the employer. You won't obviously have to cover their workers' compensation for projects. You won't have to pay unemployment taxes and claims. There's no benefits associated with that, no overtime regulation. You won't have to necessarily abide by the minimum wage for that, as well as some of the different taxes that you'd be able to go ahead and save on the payroll side of things as having a 1099 on board your organization. So when are we making this designation, right? So this is obviously all going to come upon when you bring on that first person to work with you to help obviously grow your business. Here's a couple things called the common law test by the IRS. Real basic level, we're not going to dive too far into it, but some things you should be considering are, hey, what does the relationship look like? Have we been together for a very long time? Is this more of a permanent relationship, or is it more on the temporary side? Usually on the temporary side, it's going to trend a little bit more towards that 1099 contractor relationship. Are we providing them with any benefits? Okay. As well as who's deciding on the behavioral side, who's deciding when and where the work is performed? Are you as the employer making the schedule for your contractor? Or is your contractor going and kind of dictating that schedule? A big one is whose tools are being used. Are you, as a business owner, giving your tools to this contractor, or are they going ahead and supplying most of their own tools, their own uniforms, things like that? Also, a big one is who dictates the work? Who is giving the guidance as far as saying, hey, this is when, where, and how this operation is going to get done? If the contractor is doing that, you're probably abiding by the proper way of paying them via a 1099 contractor. Another thing would be financial considerations. So is there any risk involved with the contractor as far as profit and loss? As far as how are you paying the contractor? Are you paying them through a W-2 and they're supposed to be a contractor? That's where a lot of the questions in the audit area can kind of open yourself up as a small business. So a great question is, does it really matter? In all honesty, we're telling you a lot of information, but hey, what is the effect of my small business on making sure I have the correct designation of a W-2 employee versus a 1099 contractor? So obviously there's a lot of penalties with it. So fines, penalties, back taxes for improperly classifying, as well as lawsuits, drawing the liability difference between, hey, they're under my organization, my LLC, or are they working as their own entity? Obviously, if somebody's ever going ahead and filing for things like unemployment, they're going to look into that. You're going to want to go ahead and see, hey, how is my classification if it's challenged. Do I have the proper documentation, such as the W-9 versus the W-4, different documents along that, as well as it's become very prominent, right? People file for unemployment. You need to be able to show the proper documentation behind it to say, hey, look, I was properly recording them as a 1099. No back taxes would be owed on your account. So to kind of go ahead and summarize the 1099 versus W-2, I think this graph helps explain a lot of it. So some of the different things for a W-2 is that the schedule is going to be organized by the employer, so by the owner of the LLC. As far as the working process, so it's the company is doing the training, is telling them, hey, this is where you're going to go ahead and work. As far as the workload, it's assigned by a supervisor, it's assigned by the business owner to the exact specifications of what they should be doing. The equipment would be provided by the company a lot of times here. And then also as a W-2, they're bound to one organization, right? They're working under one organization 9 times out of 10. As far as on the independent contractor or that 1099 classification we just reviewed, they're actually going to go ahead and have their hours determined by that contractor. Their assignments are case by case. It's varying. Maybe one day they're doing XYZ job and the next day they're doing something completely different. Workers are also going to use their own methods and process, have a little bit more independency and freedom to go ahead and complete the job as how they best see fit. A lot of 1099s also are going to go ahead and be making their working for several other larger organizations. So obviously, once again, I just want to reiterate that misclassifying any employees can be seriously financially crucial for your organization, right? So, I mean, it can be back taxes, penalties, fines, fees, anywhere from 22 to 43% of contractors' earnings are having to go all the way back in regards to taxes for it. So making sure you're taking the proper steps and following the IRS guidelines for classifications from day one is very crucial for your organization. As far as the third thing that I said we're going to go through on our agenda here today is a little bit more on the breakdown of payroll. We're going to dive into a little bit of the breakdown on how it all works as far as taxation goes, different things along those lines, why it's really important to go ahead and make sure if you're ever getting on a W-2, let's make sure we're doing it the correct way. No matter who you go with, whether it be ADP, whether it be anybody out there, we just want to make sure you guys are well informed and can go ahead and make the best decision for your organization. So when I'm going to refer to this, a lot of it on the employee side is if you have been an employee for a large organization at one point or ever received a W-2 from an organization, you're going to know exactly what I'm talking about when you see the tax breakdown here. We're going to remain specific to the state of South Carolina, just do some of the local tax breakdown and all of that, but we can obviously expand. So some of the employee taxes, what I mean by that is what is coming out of my paycheck every 2 weeks or every week when I get paid as an employee of an organization. So you're going to have a couple things. You're going to have federal income tax. You're going to have state income tax. Those are all based upon your total overall earnings. You're going to have FICA, which is a straight percentage. FICA is the combination of what's called Social Security and Medicare, right? So I'm sure you've all been employees at one point and had this come out of your paycheck. So it's the same thing as your employees would see one day. Let's go break this down here. And jump a little forward here to make it a little bit more easy for everybody. So employee taxes can be seen all over the place, right? So the federal and state income tax are going to be based on your total overall income levels throughout the year. It'll put you at a different tax bracket, right? And then also as an employer, one of the things you probably have never seen before is that on the employer side of things, you are also going to have payroll taxes due. You're going to match dollar for dollar their Social Security and their Medicare, okay? And then also unemployment insurance. What that is, that's protecting, obviously, if your employees go ahead and file for unemployment, you have to have that insurance taken care of for you for that time, if it does come to be, okay? So what you might see in the breakdown below is saying, what does it look like to pay somebody, right? So say we want to go ahead and pay somebody $1,000, and this is all hypothetical. You want to pay somebody $1,000. What does it cost to the employer, right? So you're going to go ahead and pay them $1,000 as their wage. They're going to have maybe $250 in taxes coming out. Your employee will see $750 in this scenario after taxes into their bank account upon when payroll is due. On the employer side, what it looks like is you're going to pay that $1,000, their total overall, what we call a gross wage, so before taxes. And then you're also going to have your employer taxes, like we talked about the FICA and the unemployment insurance. So you might actually pay more, you will pay more than what the gross amount is to make sure you're covered on the employer taxes of payroll. So with all this, obviously with withholding taxes comes filings, right? We have to go ahead and report how much the state, the federal, maybe even local, depending on where you live, is subject, as how much we're paying in per organization, right? So there's monthly, quarterly, as well as annual taxes and forms due, right? So you'll see some of the breakdowns. I'm not going to overcomplicate things today. It's a great chart to show. Essentially with payroll, there's 47 different correspondences throughout the year. As a small business owner, I know you'll have a lot going on and don't have time a lot of times to do 47 different things throughout the year, keep up with, hey, how much is XYZ, or when is this payment due? When is this filing due? So something like finding a local tax professional, a payroll service, a bookkeeper who does payroll would be something that might be very advantageous for you to make sure we're staying in compliance. We have several different things, obviously. You have My Doorway, my Suits online platform, EFTPS, a lot of different platforms to go ahead and monitor. We just want to make sure you're going ahead and paying these without accruing any interest, any penalties, and staying honestly in full compliance here. All right, grab a quick sip of water. Some of the things that are advantageous, obviously, we want you to go ahead and consult with your tax professional here to see, hey, does it make sense as me as a small business owner to be on payroll, right? So let's say without payroll, for example, as a small business owner, you're making $100,000 in revenue. You might see something in regards to about 15.3% in your self-employment taxes. Obviously, this may vary. However, that's about $15,000 at the end of the year that you're going to be paying in self-employment taxes. Some of the advantages of going ahead and having yourself on payroll or an employee on payroll, right, is let's say you're making $100,000 in that same situation, and you could write off $50,000 as salary. And then also go ahead and put some business write-offs, things like that, to really lower that taxable income come year end. I'm not going to jump too far into the nitty gritty of it because we obviously want you to go ahead and consult with a tax professional on all of this and make sure it's right for your situation. But there are a lot of great ways to go ahead and save on some of your year-end taxes through utilizing something along payroll or having the ability to write that off as your employee's expense. Some of the other advantages as a small business owner, also of utilizing something for payroll, is you have the ability to put a W-2 to your name, right? So where does that come from? Strength in credit, as far as, hey, it might be easier to go ahead and apply for a mortgage or some sort of, let's say you're renting an apartment. It's easier to show a little bit of proof of income as well as boosted credit. Some of the different things is you also can utilize the unemployment benefit, and also it's going to help you stay in compliance as far as having somebody manage that for you. A little bit of a plug on the ADP side is we go ahead and obviously take care of all of that different, a lot of those services for you, as well as other providers would be able to do for you, and help you out with some of the HR side of things, as well as monitor all those 47 correspondences and really alleviate that from your plate. Skip through there. And obviously most payroll companies, as well as ADP, whoever you would decide to go with, would have the ability for yourself to go ahead and manage all of this on the go through mobile apps, through a website, different things like that. And to kind of wrap us all up here is I just wanted to go ahead and those original questions and thoughts that we started with, go ahead and see if we put an answer to those for you. So the first one we talked about, I'm too new for payroll service, but I'll explore a little bit once I've been in business. What do we talk about, right? Making the correct designation between a W-2, consulting with somebody who's doing this every day to make sure, hey, are they a W-2 or are they more on the 1099 side of things? I don't have enough employees to be on payroll. As we talked about through our different business formations and entities, any W-2 is going to go ahead and qualify you to be able to have to pay the unemployment, the FICA, the state withholding, federal withholding tax, all of that. All of my employees are contractors. We encourage you obviously to reach out to see, hey, are they truthfully contractors or is this a misconception? And so one of the things I just want to obviously go is say thank you for obviously the time. We appreciate you guys and want to be able to help answer any questions and be more on the consultative side of things for you. And with that being said, Thomas, I'm actually gonna go ahead and kick it back to you.
Jack, thank you so much for that. It's very insightful information. I'm sure a lot of our small business owners will appreciate that being laid out for them. But at this point, I want to ask, do we have any questions that need to be addressed? Dr. Pringle, I know you got a pretty inquisitive mind. You have any thoughts?
Yes, about the S corp and the payroll. So I am on my payroll right now, but I don't see where it's feasible for me to pay myself an income, at least during the first year. Um, Also, I don't need the income from the business as well, but my business had some challenges getting open, and we were paying off a lot of debt this year. So I don't think it was feasible for me to pay myself this year, even though my tax representative set us up as an S corporation.
And so what's the direct question, Dr. Pringle?
Is that a bad thing that I can't pay myself this year?
So one of the things that, and obviously your tax professional is going to have a lot more insight into your overall financial situation with everything like that. With being an S corporation and making that S corporation election, one of the things that you would be required to do, and maybe consult with your tax professional and be like, hey, maybe we should declassify for an S corporation for right now. But if you are going to obviously take that election on the S corporation side, then you would at least need to be able to go ahead and pay what's that fair and reasonable salary. What that might be elected for you is obviously going to vary based upon your situation. So, Dr. Pringle, for as far as what my advice to you would be is definitely reach out to your tax professional and ask, hey, where is this S corporation coming from? Maybe say, hey, I was meeting with somebody or learning more on the payroll side and know I need to pay myself a wage. What did you have in mind for what that wage looks like to be able to fall where I want to be come the close of 2024?
All right, so I just need to figure out what's a reasonable pay a salary for myself this year.
Yes, and like I mentioned, so with that, obviously your tax professional is going to help you elect what that reasonable salary would be for yourself. They know a lot more than I do about your situation. I'll be completely upfront and honest with you on that. So yeah, my recommendation would be, hey, Mr. or Mrs. Tax Professional, I was just learning more on the payroll side and was speaking with some people even over at ADP. You can mention that I know obviously with the S Corp, we want to go ahead and be on payroll as one of the requirements. With that being said, what would you recommend for what my fair and reasonable salary would be?
Now, I also have a question. So it's probably too late this year. I'll probably get on the next 3 or 4 payrolls. But what if I pay myself and then I just transfer the money back to the account?
So, well, some of it would be, and all of this, I hate to keep telling you the same thing as far as reach out to your tax professional, but just as far as like your overall insights, it's a really hard question to answer without knowing a lot more of a deep dive into like the financial situation and what all of that would look like. Because essentially, then you would just have taxes coming out, and then put the money right back into the business account. So like your net pay, what your take home pay would just be putting it right back into the business account. That may or may not make sense for what your current situation is. But like I said, I don't really like to step on people's toes as far as the tax professional, and they've done a lot more digging, I'm sure, into your current situation. So I would definitely refer that question over to them.
Okay, I'm tracking.
And so basically you would just be, paying yourself, from what it sounds like, you would just be paying yourself, um,
On
taking the
paper.
taxes out, on paper, and paying, giving the taxes to the government and then putting the rest of the money back in, which it almost seems like a dog chasing its tail kind of thing, not making a lot of traction, right?
Hmm.
Right. Anything else, Dr. Pringle? Curiosities?
Yes. So y'all say that we get 8 hours of training with QuickBooks. So I do have a QuickBooks account. I've been going through setting up everything. Previously, I've been using Excel and using pivot tables. Um, but I feel like QuickBooks might be better for the climb fund since I'm just sending over my Excel documents. And
Hmm.
QuickBooks, has easy reports. So I
Right.
would like to get some help establishing that.
So you have come to the right place today. Caitlin can absolutely help you with that. Like she said, you have 8 hours to work with her. And by all means, if you need more than 8 hours, just let me know and I will make that happen for you. But I can, after we get off of here today, I can shoot you over Caitlin's information, and you and her can set up a time to, have a discussion and talk about what you need to do to maximize QuickBooks for your business.
Please do. I also have a question about payroll.
Mhm.
So, what percentage of my expenses should my payroll be? For example, if my net sales are around $260,000 a year for my net sales, right?
Mhm.
What's a good percentage should my payroll be?
So I think that is going to vary, a lot from business to business. I mean, most business owners want to minimize the percentage of payroll, um, you know, because obviously everything you pay out to take something away from your bottom line. But at the same time, you also have to pay people what it takes to keep them around, to keep them happy, to keep employee morale up. And so I think that you, as a business owner, you have to kind of figure out what that balance is for you. I don't think that there's a written rule about what that should look like. You never want it to overwhelm the rest of your, profit and loss statement. You don't want it to be an overwhelming amount. But at the same time, you have to do what you have to do to keep employees happy, productive, and engaged in your business every day. And so I've never heard anyone put a voice to exactly what percentage it should be. But I think, you know, figuring out what the balance is for you, um, is something that you have to tinker with. I would be more than happy to look back at my, profit and losses for my businesses and tell you what our percentages look like. Obviously, we were in a different industry and we probably have a different number of employees, but I would be more than happy to share that information with you just to give you another data point.
That'd be perfect because right now I have 70 employees, and for the year my payroll was around 65,000 right now. Is that too low to be paying people? I mean, they're all happy.
So that's a really and Thomas, I think we're probably going to agree on that. That's a very difficult question to ask because there's so many different factors that go into it, right? Like line of work, location that you live in. One of the things, Dr. Pringle, is so ADP is a very large organization with a ton of data, right? So one of the things that for yourself or any of the Climb Funds clients, I'd be more than happy to help provide for you is we could have a conversation along, hey, what is we can do what's called compensation benchmarking for your organization. What that is, sir, it's basically we'll go ahead and take where you're located as well as what line of work you're in and produce reports for you based upon conglomerated data, right? So, hey, this is what the average earner is as a pediatrician, whatever it may be, right? Whatever line of work you're currently in, and say, hey, this is what most people are paying yourself. And we can actually get as granular as down to the county. So we could go ahead and yield reports for you saying, hey, other people in my county are making 10, 12, 15, $100 an hour, whatever it may be. So you'd have an idea that, hey, I'm sitting in a really good spot here, or maybe I'm not.
Okay. And I'm supposed to be switching over to ADP sometime next week as well, too. So that's good.
Well, that's
Wonderful.
wonderful, wonderful.
Yeah.
Um, yeah, and Along the lines of what you said, Dr. Pringle, if your employees are happy, that's always a great sign. Um, but it's very tough to understand what is going on in folks' minds. So I think, when it can be very beneficial as a business owner, to maybe have quarterly meetings with each employee, or maybe every 6 months, and just touch base with them, see if they're happy with where they're at. Do they feel like they need to, expand their income, and just gauge the temperature on what your employees are feeling. Communication is always, very important for these kind of things. And it's impossible to know what someone's thinking. So I would certainly, have periodic conversations with employees just to try to gain some insight into how they're feeling about the situation.
Okay, I can do that. Well, they all just got raises, so they should be happy.
Well, that's great. I'm glad you guys are, hitting the ground running in 2024 so people can get raises. We got to come back out there next year and see you guys again. Tried some of that food back in May and it was absolutely wonderful.
Please
So,
do.
Caitlin, Jack, if you're ever up in the Manning area right off I-95, A&A Seafood Shack is a wonderful place to stop and just have a fish sandwich or some gator bites or something like that. Dr. Pringle, anything else for you today?
No, sir. I'm just I think I'm ready to get started with QuickBooks so we can set up a time to meet. And I've categorized, most of my data already. So I've already linked my bank account and did all of those steps. I'm pretty
Good.
tech savvy, so it won't be that long of a meeting. I won't waste your time on anything like that. So whenever you're ready, I'll be ready. And you say y'all do reconciliation every month. Is that a service that I have to pay for? Like, do y'all what else do you offer?
Yeah, so we, first of all, I look forward to meeting with you and talking with you more. But yeah, we can do all of your bookkeeping for you, categorize all your transactions, reconcile all your accounts, and then record things as they come up, like assets, liabilities, send you reports, all of that stuff. But yes, it is a paid service to go with that.
Oh, that's no problem. I wouldn't mind paying that, but I would want to start from the top. I would just want to do everything, get on my assets, liabilities, so we can just start fresh and have a overall picture of everything.
Yeah, good.
So,
Looking
Caitlin, I
forward to it.
I think Dr. Pringle will be, a very, very easy client for you to work with. He does everything on Excel right now, and he does it very well. Sends it to me every month, so I think you guys should hit the ground running in that conversation. Dr. Pringle, I will be sure once we get off of here today, I'm going to send you Caitlin's contact information as well as Jack's contact information, so you guys can reach out, have discussions, and try to get you where you feel you need to be heading into 2025.
thank you so much. I appreciate it. Great meeting, by the way. Great meeting.
Absolutely. We thank you so much, sir.
Thanks.
Um, and with that, I think we have just about exhausted our time here today. But Caitlin, thank you so much for being here with us. Jack, we really appreciate it. This was a very productive and informative webinar. This will be going up on our website for future clients to view and take notes from. So guys, thank you so much for being here today. Everyone at Client Fund really appreciates it. And we'll see everybody next time on the Client Fund Entrepreneurial Elevation Series.
Thank you so much.
Thanks, Tom.
Thank you, guys. Y'all have a wonderful weekend.